Good morning, ladies and gentlemen. Welcome to the show. Listen, I'm really glad to have you guys here. Today is October 2nd, 2019, a Wednesday. Now listen, I want to make a point with you guys. Wall Street, the bankers, the Federal Reserve, and all of that crew, they've been dumping money on their side of the fence, which has been enriching the 1% for a long time now. They're not going to stop. They're going to continue to dump money on their side of the fence. They're not putting any money on our side of the fence. I don't care what they call it. Whether they call it universal basic income or they call it whatever they want to call it, I don't care. I want them to dump some money on our side of the fence. Because the middle class, soon, if they keep doing this, dumping money on their side of the fence, which raises prices of everything, and not dumping any on our side of the fence, soon we're going to be faced with a choice. Do we eat this month or do we pay the rent? The next step is we end up on the street. These, I don't know what to call them, but they're basically robbing from the poor and paying the rich. It's time they dump some money on our side of the fence for a change. Okay, let's start the charts right here and take a look at what's going on. Silver price today, shooting up to the sky. Look at that, guys. Look at that. It's a rocket ship to Mars. 28 cents up today. That's a nice little gain today. $17.49 bid, $17.59 ask for silver. Let's take a look at gold. Gold's up today too. Almost up to the $1,500 mark. It's up $18.20 on the day at $14.97. So it's looking good for gold and silver today, you know. There's going to be a transition coming up pretty soon where investors are going to all of a sudden, a switch is going to flip. They're going to realize, hey, you know what? We are spiraling downwards. The world economy is spiraling downwards. They're almost to that point of realizing it right now. You know? A lot of them. But when it overwhelmingly becomes the overwhelming consensus that we are heading face first into a recession, then all of a sudden they're going to start really running heavy into the safe haven assets. You know, they've been running like crazy into U.S. Treasury bonds, but they haven't really been running yet into gold and silver or cryptocurrencies for that matter. Let's take a look at cryptocurrencies today and see what it's doing. You know, we had a little price gain. I told you guys a while back when it was at 10,300, I think it was. I said that 8,000 is the floor. Well, I didn't really expect it to make it down to the $8,000 mark. I'll tell you honestly. I expected it only to go to like 93 or 9,200 or something. But yeah, it went down to the $8,000 mark, where my floor, I told you guys the floor is. Well, here's the thing. It's still staying a little bit bearish. I'm expecting a transition back over to a bullish, you know. But as long as it stays bearish, you have to start to think, well, where is the floor? Well, there's a real solid floor underneath it at 6,500. But here's the thing. So that's what we can look at as our downside risk, 6,500. Upside potential is practically unlimited for cryptocurrency. You know, the same things holds true for gold and silver. The upside potential, when we're going into a worldwide hyperinflation, and this is the only exit route, gold and silver, crypto, gold and silver for the most part, you know, but I don't think gold and silver is going to be able to handle it all. I think it's going to overwhelm gold and silver. It's going to drive the price up so high and make it so unobtainable that cryptocurrency is going to catch the spillover, if you know what I'm saying. You know? It's like when your mama used to make you a pot of pudding, on the stove, and she'd let you lick out the pot. Well, the most of the pudding went into the pudding pan, but she handed you the pot. Well, that's what's going to happen with cryptocurrency. Gold and silver is going to get all the pudding, right? The big major amount of pudding. Cryptocurrency is going to get to lick out the pot, and I mean, it's going to be the overflow. It's going to flow into cryptocurrency. But gold and silver is going to disappear so fast, it's going to be unobtainable. It's going to be unobtainium. I can't begin to tell you how much money is going to crush when the world's never experienced a hyperinflation before, and they're going to come running out of the treasuries. They went running into the treasuries, they'll come running out of the treasuries when the hyperinflation starts. Because basically the treasury is going to be worthless. And there's only one place they can all go when the hyperinflation comes, and that's gold, silver, and crypto. So they're gonna go for the gold and silver first, and I mean it's gonna be unbelievable how high this stuff can go. How high can these go when you're in a hyperinflation, and the other guy might have $1 million in his hands, and he wants to buy your gold coin. But that gold coin is going to be worth $1.2 million tomorrow. And he's got the $1 million. He's begging you for it. The gold coin, Well, you hold out until another week or two, because hyperinflation, this is what happens. You hold out a couple weeks more for your gold coin, it's worth $2 million. Well, he'll come back with $2 million. Are you still going to sell it to him? Because 2 weeks later, it's going to be worth $4 million and $8 million and $16 million, because the dollar's going to its intrinsic value, which is zero. 1 million times zero is zero. Your gold coin is going to live through all of that. It's going to watch the hyperinflation until the hyperinflation's over. And when the hyperinflation's over, the gold coin will retain your purchasing power. Whereas these fiat currencies are just basically going to go through a hyperinflation until they hit the end of the line, and the end of the line is a reset. The reset doesn't come until the end of the hyperinflation. That's when we get our reset, and they have to go back to hard money. Nixon took us off the gold standard in 1971. They're going to have to go back to hard money again. They got no choice. I mean, this whole system is dying. They're dumping all that money on their side of the fence. Ultimately, in the end, it's all going to go to beans anyway. We might as well get some of that money before it all goes to beans. Wouldn't it be nice to have a little bit of, so that we don't have to make that choice whether we're going to pay the rent or we're going to feed ourselves? We need that. We need that money, in the middle class. Because the middle class is suffering. The middle class through America, Canada, the whole world, everywhere. Every country on earth, without exception, the middle class is going to be drained of every ounce of liquidity that they have, every dollar that's in their pocket in the end. And, while this system is in slow collapse, they need to dump some of that money on our side of the fence for a change. Anyway, let's move on. Dow Jones Industrial Average today. You can see it collapsing. The whole thing's starting to collapse. Dow Jones is down big time today. The markets are roiled. I mean, I never seen anything like it. The Dow Jones is up 300 points. It's down 300 points. I might look back here 5 minutes from now and we might be up 200 points. And then I come back 10 minutes later and we're down 400 points. I mean, the markets are starting to reel like a drunken sailor. Back and forth, back and forth. What happens when you get a guy that's like that? He's walking down the street and first he's going one way and then he's tipping the other way. He falls down. Okay? That is what the market's doing right now. It's walking like a drunk. Like first it's tipping one way and then it's tipping the other way. It's gonna fall down. That's what's coming. Anyway, let's take a look here at crude oil. $53.63 today. It says it's up a penny on the day. But you know, we can see this decline in the price of crude oil. If we go back about a week, we can see a steady decline in the crude oil price. This is an oil-based economy. Crude oil is so important, the price of crude oil, to the world economy, you know. And when I see the oil price falling off like this, every time it's fallen off, I see volumes increasing. You know what I think? The first thing I'm thinking is something's gonna happen. Something's gonna happen. Probably in the Middle East or someplace. I don't know what. I don't know what. But I see a situation coming along every so often there, and it's been too quiet for the last few days. And you know when something's too quiet, you know something's coming. You know, and I just got that feeling something's coming. U.S. Treasuries right now. What we're looking at is falling Treasury yields. Like I say, they're looking at this as a safe haven asset, and every time they see trouble, they hop into these Treasuries big time, and they've been driving these yields down awful low. Look at the U.S. 10-year, only 1.62%, and it's down 2 basis points on the day so far. All the way across the yields are falling today, you know, on Treasuries. This indicates investors' nervousness because they perceive the Treasuries as the best safe haven asset. They're going to run in, but they're all going to come running back out again. You know, it's like running into a burning building. You're not going to stay in there very long, because ultimately, in the end, they're going to realize that they can print as many dollars as there is leaves on the trees, and markets have a way of finding fair market value. Ultimately, in the end, that's what the job of a market is. That's what the jobs of the market. That's the job. The entire job of these markets is to find fair market value. And what they've done is they've created a distorted system where the markets can't find fair market value. Ultimately, in the end, it's going to collapse, and the markets are going to find fair market value. You know, and that's when the reset comes. That's when the fiat currencies finally stop. But what comes to replace them? Well, of course, more fiat currencies, but they're going to have to back the fiat currencies with something. They might try it on. They might release fiat currencies, not backed by anything again, as a reset to try to convince us to buy in. But we're too smart for that now. And those fiat currencies will fail too. We're going to have to go back to a fiat currency that's not really a fiat currency, that's actually backed by something of value behind it. Let's take a look now at the U.S. dollar index, 99.14. That's high. That's a high dollar index, but it's fallen back down a little bit today, and this is helping gold and silver to catch a bid. You know, U.S. manufacturing right now, extremely weak. It's the weakest since, get this, 2009. We're in it. We're in it right now. The crisis is on. You know, it's going to be a struggle for all the middle class all over the entire world. First off, just to keep your job. Even if your job isn't keeping up with the Joneses or anything like that, even if your job is not, at the end of the month you got no money left, still, if you got a job. Whereas a lot of people are going to lose their jobs. I'm going to give you guys numbers right now of how many people I think is going to lose their jobs when this recession really hits. I think 10 to 15% is probably going to lose their jobs. That means suddenly they're all out looking for work. You know? Because now they haven't got a job anymore. These people are qualified, they're good hard workers, and they're going to desperately need a job. This means that the people that have been looking for work and don't have a job, don't have a snowball's chance in the oven of finding a job or finding work, because there's going to be so many people looking for work. Listen, thank you guys for listening to this show. Give me a thumbs up, and we'll catch you guys in the next show. Bye-bye, guys.